Do you take trades and find yourself immediately in a drawdown? If you do, then this video is for you. Today, I'm not going to spend much time going over my top-down analysis and how I get my trend bias or directional bias from the higher time frame, because I've done that on my past couple of videos. The previous video I put out last week basically had an in-depth analysis to how I basically go about entering these trades. So you can watch those videos to basically find out how I determine my directional bias. But for today's video, I'm going to keep it nice and short and sweet. Basically going over my entries. I had a trade on GBP JPY last week, and that was my only trade. I did post the before picture on Instagram, and I also put up the after picture on how the trade played out. But what I wanted to do on today's video basically is just to go over my entry, because if you read what I wrote on the description of the post on Instagram, basically I was waiting for price to get to my kill zone just so that I can see what price action was going to give me and to see how I would basically be getting involved with the trade. So I was looking for potential buys because we had a lot of buyers that came into the market in the previous week. So price was retracing to that spot, and I was basically anticipating that the buyers were basically going to get involved as soon as price returned and stop price from moving lower. So basically what we had price retrace to that level, and I had my kill zone, right? And when price got to the kill zone, immediately what I saw was there was aggressive sellers to the downside, and I thought that this wasn't going to be a trade. But this is why patience is so vital when it comes to trading, right? Because you might have a zone where you know that there's a high probability for the trade to go in the opposite direction, and you're waiting for it. But rather than getting involved in the trade straight away, the best thing to do is to look for price action and what price gives you. Now, if you've watched any of my previous videos, you know that what I use is basically volume spread analysis. And one of the major reasons why I use volume spread analysis is because it lets me know what the liquidity is doing there. Now, I hear a lot of people talk about liquidity. Once again, I say this all the time, right, to my friends and most people that I know in the trading industry, is that volume is a part of liquidity. You can't have liquidity if there is no volume. So that is why I hold volume to a high regard when it comes to trading, right? So that was basically what I was looking for when basically this trade was playing out. So let's jump into the charts, guys, and I'll show you what was happening. So here's my trading view. You can see that this zone right here was basically where I was expecting price to come to. Price was here when I initially posted it, and I was expecting price to push up to basically Monday's high. And you can see that my target was basically the ultimate target anyway, was basically the 0.27 Fibonacci extension. And the way I got that was basically just drawing my Fibonacci tool, and you can see we had a 78% retracement, and you can see the Fib extension is basically around this level. So what I was expecting for price to reach this level, the high, the Monday's high, and then potentially get to the 0.27 Fibonacci extension. Now that would have been about a 6-to-1 risk to reward. But I'll show you why I decided to opt for a 1-to-2 risk to reward at the end of the trade. So to start off, guys, if I just remove this, you can see that price was coming to the area, right? And you can see there was a ton of aggressive sellers coming into this zone. So already, I was looking for buyers to come in. And you can see we had some buying going on around this area, but this wasn't significant enough for me. Because if you know from my previous videos, I like to see aggressive buying or aggressive selling to let me know that there's actually volume in the market. So I didn't see that with this bullish push, and immediately you can see how much selling came into the market and pushed price beyond my kill zone. So that was the point where I was like, okay, sellers are not giving in. They're basically quite strong, right? So when I saw this, I was like, okay, you know what? I might not get involved with the market, but I'll still wait and still watch to see what price action does, because just because price is pushed below doesn't necessarily mean that these sellers are going to hold, right? Especially because we had this amount of buying last week. I believe it was last week Friday. So because we had so much buying last week Friday, I was like, okay, these bulls are definitely not going to give up without a fight, right? So let's see what happens. So as soon as we got this aggressive sellers, I was already apprehensive on this trade, and I was like, you know what? Maybe the buyers I'm looking for is not going to play out. So you can see 5 o'clock London time, this market was already coming to an end. So I was kind of nah, but yeah, I thought, you know what? I'll wait around to see how this market plays out, right? And this is why patience, guys, is so vital in this game. So I was waiting, and you can see several hours later, because I love, guys, the 78% Fibonacci retracement, price tends to respect that level a lot. Obviously, you need other confluences as well. Don't just say, oh, charting said 78% Fibonacci retracement is a good area to buy and sell. Make sure you have multiple confluences as well. So when I saw this rejection, right, already I was like, okay, you know what? I'm going to go to my VSA chart and see what volume spread analysis is telling me, because we had a couple of actions. These aggressive sellers, and then we saw this rejection, and immediately we saw massive bulls coming in. But prior to the bulls coming in, I wanted to see what was going on. So if we drop down to the VSA chart, you can see right here on the 7th of February, where where I was the day I was waiting for this trade to play out. So you can see the yellow box basically is London session, because that's where the most volume come in. So you can see the first wave of aggressive selling into that zone. You can see we started to have VSA, right? And this was telling me that this is potential stopping volume. And what stopping volume is that there's a potential for price to actually retrace and go in the opposite direction. But one thing you guys have to remember is these are just indication. It doesn't mean, it's not a signal. It's just alerting me to like, okay, well, something's happening here in regards to volume, right? So from when I saw the stopping volume, I was like, okay, I'm going to look around. I'm going to wait and see what happens. And that's the reason why I stayed behind even after we got this massive wave of selling. I stayed behind to see what price does. And you can see we had a potential climactic action. Now, a potential climactic action is basically similar to a potential stop in volume, right? And if we read the description, what it says is a down bar with high to ultra high volume must contain buying from the professionals, especially if it's into new, fresh, low ground, and the next bar is up. So you can see this aggressive selling, especially if it's in new lows, which it was, must be professional selling. Now, what you have to understand is whenever you get volume like that, it doesn't necessarily mean it's a selling volume, so it means sell. Because as you've seen here, this is basically climactic action. And a lot of times what climactic action means is that it's probably profit taking happening, right? And it's probably absorption. If you watch my last video, you see I like to see absorption. When sellers are basically trying to push the price down, but buyers are absorbing. And that's why you see on the next candle, we had buying coming in. So if this was a massive selling wave, you should not be seeing buyers coming in. And that's exactly what we got here, right? But still, this wasn't convincing enough for me, because I was like, I'm not seeing the aggressive buying that I would like to see. And so you had one more push, right, below these lows. And guess what that was? That was a test after a shakeout. So you can see this potential climactic action was basically the shakeout. And this was testing to see if there are any more sellers, right? So let's read the description on the testing. So you can see a test is a markdown during the bar, often on bad news, to challenge any weak holders to panic and sell. If they do not sell, the price rebounds up towards the middle or high, and volume is low. Can be high in the futures market. The lack of selling gives the professionals confidence that they do not have to absorb large amount of suppliers. So there you go, guys. So basically what this test was doing is to test to make sure that there were no longer any sellers. So that way the professionals do not have to absorb all the selling coming in as price moved up. And as you can see, that's why we had aggressive buying now. Now those aggressive buying, even though this was after London session, the aggressive buying was the most aggressive buying we've seen throughout that day on the London session. So that gave me enough conviction, just as it said, right? It gives the professionals buyers, I'm confident, sorry, it gives, so the lack of selling gives the professionals confidence, right? So all I'm doing, guys, I'm not a professional, right? Because my account is nowhere near the size of a professional. But what I'm doing is I'm studying volume and I'm seeing basically that there's no longer any sellers in this market. And immediately we got the aggressive buying. Now, this is what I was waiting for the whole day. And as you can see, as soon as we got this aggressive buying coming in, that was when I got involved. Now, to add to my confluence, although this doesn't really hold much weight, but it gives me more confidence, I just draw a simple counter trend line from when this initial wave of selling began, and you can see the aggressive buyers was basically breaking the counter trend line. So that was a market structure change, and you can see we had a little test. Nobody's willing to sell. The sellers tried multiple times. It couldn't go down, and immediately we had our push up. So, guys, I hope you can see the strength in volume spread analysis, right? So if you are trading liquidity, try your best to study volume, because it will help you that much more with your entries. Regardless of what bias you have, this is a very strong confirmation when you are trading the market. And what it does for me as well is it allows me to be patient, right? It allows me to let the trade come to me rather than me forcing a trade and immediately finding myself in losing trades. So this is one way you can actually avoid losing trades. And as you can see, the market pushed up and it went for a maximum of 3-1, almost a 4-1. And let me show you something, guys. Look at what happened. So you see this kill zone. Look, when the sellers came in, look what happened. Where did it bounce off? It bounced off this same level, and this was a couple of days later. That's how strong these levels are, especially when you're taking volume into account. So you can see these buyers were refusing once again. It came back into the zone and immediately it went up. I think it was about, what was it? It was about 140 pips immediately as soon as price revisited this area. And that is the importance, guys, of using volume. I'm not going to lie, I didn't go out. I didn't take the maximum amount, but you can see here where we had these amount of sellers coming in, where we had this whipsaw. That was basically the reason why I got out, right? Because I'll show you something. We had a lot of sellers right around this level. This was the open of London session, the same day where I was basically trying to get involved in this market. So I'll just mark this up for you real quick, just so you can see that more clearly. So here we go. So I marked that up. So I've said this in one of my first videos on YouTube, yeah? Whenever I have a target, it doesn't mean I'm leaving my position and waiting for it to hit my target. No, that is too naive, because the market is alive, yeah? You need to make sure that you're managing your trade as you go along. So as you can see, when price came into this area where there was a ton of selling, you can see immediately we found turbulence. And you can see how price stalled for several hours. It tried to push above the high, and you can see it couldn't push. So immediately I took half of my profits from this point, right? And then when I saw price whipsaw and I saw it couldn't close, I knew that these sellers were basically very strong. So I took the remaining half right around this area, and overall it was about a 2-to-1 risk to reward. And I was happy with that trade. I knew that these sellers were quite strong, because take a look at this, right? So we tried to push, we couldn't even get to Monday's high, and look what happened. Immediately you got a ton of sellers, and where did we go back to? The same area where there was a lot of volume, a lot of selling volume, and we are currently consolidating in that same area again. So this is why it's important. You can't just get involved into a trade and think it's over, right? You have to manage your trades. You have to see what market is doing, what market structure is looking like, and basically you have to manage your trade accordingly. I'm sure I've said that enough times now. But anyway, guys, that's how I basically enter my trades and manage my trades. I hope you've learned something from this video. Smash that like button, smash that subscribe button, and I'll see you guys on the next one. Don't forget to comment below. Let me know what else you guys would like to see in regards to volume spread analysis or anything else in general. Take care, guys.